Entry, exit, target.
And the interesting part is all those lines that you just put on there, every one of those can be alerted on in TC2000. So if a pattern is developing, they can alert on the downtrend line, so that when it's broken, they'll get an alert. They can alert on the lower line, like this was your sell. You just click on it, set alert, set your parameters for your alert, and click OK. And it will alert you. It'll send you an email, text message, as well as have audio and visual alerts in here. So as they draw patterns like that and they're waiting for their breakout, all that stuff can be automated for them. It's very quick to notify you. Then you go and you take your position. You've already drawn that out. You can also draw horizontal lines at any of those positions. So you could drop a horizontal line in here, and you'll always have a visual line out in the future developing for you, so that as the stock moves up and it hits that, you can see when you're approaching your target. So it's a very easy way to manage the entry, exit, and target.
Now, if you would only develop a system that would auto trade it.
Yeah, well, you might be hoping for much there.
But the key to me is that you talk about alerts, and I like alerts and I use alerts, but the key to me is that on, let's say, either of these two bars right here, that's where you put your order in.
Mm-hmm.
If my entry price is whatever we said it was, $28.75, I can go into my trading system and I put in a buy stop limit, 500 shares, $28.75, good till canceled. And now I don't have to worry about it.
Yep.
When the alert goes off, it's telling me I own it.
Mm-hmm.
Now I go back into my system, I type into that same system, sell, stop, limit order at the stop, and I let it go. And then as it moves up, as SunTrust breaks up here, and now it's at 29.28, I may want to raise my stop up to 28.40.
Mm-hmm.
And so I ratchet my stop up 70 cents, I replace the trade, and I keep going on. Reset my alerts. I can now set my alert at the exact stop price.
Right, exactly.
And then it alerts me to the fact that I hit my stop on the trade.
Exactly.
And so it coordinates with your trading account as well as that. And that's the dynamics of all of this, is that finding a tool that works for you as a trader all the way around. Now, what I want to do, Michael, is because I like to confuse people, is, well, you know, it's the way of life, is to take this and say, all right, can we use this any other way? You know, am I stuck with the S&P 500?
Right.
You know, and the answer to that is no. It works in a lot of different ways. So one of the things that we have actually looked at is that there are 7 asset classes. And what we did was we built them across the top. Here's the same chart for the 7 asset classes. And as you point out up here under the bar, you can see all of those, and that you got the EFI index, which is the global, the emerging markets, the treasury bonds, emerging market bonds. You've got DBC, which is commodities, IYR, which is real estate, and that red one, I have no idea what that is. Oh, UUP is the dollar. So you got currency. So you got all 7 asset classes that are involved in this, and you can track them. Now, in this one, I use VTI, which is the total stock market index for the U.S. market. So what we're looking at is how have the asset classes outside of U.S. stocks performed against the other asset classes. And it shows it very clearly. An example would be right here, which is on whatever date that is, 9/5, that we have essentially a pivot point. And we can look at that, and you can see the blue line, the emerging markets accelerated, and so did the global markets. If we, just because I already know what happened there, it's very simple to know. What happened there is that Spain and the IMF and the ECB all started to try to work this stuff out. We saw positive vibes out of the global markets, so they went up. What's interesting is what happened to the other components. Currency. The dollar got smacked in the head. Why? Because, one, the Feds intervened, and we can see what's going on there. But you started to see the other markets pull away. So as global markets got better and the U.S. stock markets got better, you saw other asset classes retract. So what you're seeing is the acceleration of the 7 asset classes.
And the other part of that is you built a watch list with those 7 asset classes.
Is that cool or what?
So they have that same ability to do those custom date sorts from any point on the chart and put in those custom date sort columns.
Or I learned from some guy I was talking to the other day that I can take the ruler
Mm-hmm.
and I can actually put this down here on the pivot point,
And you can see the performance.
and you can see what's happened on the side.
Yeah,
That was just like, I don't know who told me that.
I can't imagine.
Good looking guy though.
Your bald friend.
But I mean, it gives you a great indicator where, that if the pivot point here, that the U.S. markets were up 2.7%, this was up roughly 4.3%, and then the emerging markets were up roughly 6.5%.
Exactly.
But it gives you a great visual indicator of what's going on. After you showed me that the other day, I jumped on that and said, man, this works great with this chart because it now can correlate to your pivot point. It gives you a great visual.
Exactly.
So,
And in fact, I'll show you a quick setting here. You change this from manual to left side of chart, which is right there. It will always start on the left side of your chart at your pivot point.
that's just beautiful. But so to me, when you break this down, you can start to really do a lot of crazy things. And I hate to show people all these things because I don't want you to go off into tangents away from things. But it's like, to me, of late, the dollar has been, a train wreck. And you can see, if we scroll this in, you can see that the dollar actually became a mess down here around the 14th. And actually, it goes further back than that. It starts, where's the peak? I guess right here on the, what is that, the 24th of July. And this is where the Fed started talking about QE3, or the quantitative easing part 3. And what we ended up doing was, anytime you've got relief from the Fed, you're going to get selling. Where's that stupid date?
What are you looking for?
July 24th. Is that it?
Mm-hmm.
All right. When you get
the white line on the chart, then is UUP, which
is the dollar.
Okay.
So what you see is, as the dollar starts its downward trek, all the other currencies outperformed it. And, that's where you start to look at what accelerated. And you can see over here early on, it was the red, green, and orange lines. And you can see that they pretty much stuck with that all the way through. And you can match them back up against the upper side. The orange line is, the orange and green are actually, those are indice groups. Why do I have those on there?
Here, change your watch list.
Let me get this off of here. All right. And you can see, if we go back all the way to the pivot point, you can see that the gray and then the yellow line, which is kind of hidden behind, it was paralleling, you can see, with the purple and green all the way through there. And then all of a sudden, the yellow line accelerated. That's the euro.
Mm-hmm.
But you can kind of pick up which currencies are moving, and the interesting part of all of that is now you can buy currencies the same way. You can find out what's moving relative to all these pieces. And that, again, it's bringing the news of the market to life. In other words, if I hear that, I'm going to call him Alan Greenspan, but Helicopter Ben comes out and says we're going to throw more money at the markets, that's bad for currency. Yeah. If it's bad for currency, then I want to look at what's going to accelerate away from the dollar, and I can benefit from that.
Well, for me, one of the things that this has allowed me to do is to trade in the currency market without having to become a Forex trader, because I can use these ETFs and actually trade them if I want.
And that's the cool part, is that they're there. And there are leveraged versions of these, but you can do it on the unleveraged, is generally how we like to play it. But you can do the same thing with commodities. We took the United States Commodity Index, and then we built the commodities around it. And again, like you're saying with currencies, I used to hate commodities because trying to trade them was a nightmare. Now we've got ways that we can trade commodities very simply, and you can see what was accelerating. I find it interesting that palladium, which is the green line there, a lot of people don't even know that palladium is a metal that you can trade. But you can see the most obvious trade out of that was silver, which is the top blue line. Yeah. That was about a 21.5% trade on the acceleration of silver off of the pivot points. But you can, that's what, flipping through each of these, so we built the country ETFs, we built the EFI index. and who's accelerating off of that. We built the NASDAQ 100 with the 10 largest stocks of the NASDAQ 100. But you can do anything, and it's not that hard.
This is all part of the workspace that people can get from you. I mean, you've already done this research and put it together.
Exactly, and they get that. All the watch lists are built to match them over here so that they can actually match them up, and it makes it a lot easier for you because it's there just to go use the desktop.
Yeah.
I mean, we charge $40 for access to the desktop. I probably should charge like $4,000 for access.
It's a pretty robust desktop, no doubt.
But the key is not the desktop, is that what we're starting to build now with it is how do you do the research with it? How do you actually start to make money from it? How do you build your watch lists with these? And we're going to eventually have watch lists that goes with each of them as they start to break down what your pivot points are, what to look for within these pivot points. And it's starting to build our research list for people that they track on our website. So when you go to Jim's Notes and you click on our research page, as a subscriber, we're pulling our research from all of these pieces. We're taking all the news, we're taking all the pieces, and we're building our research list basically exactly from what we're talking about right here. And that, to me, is worth more than I could say. I mean, I have to say that we would spend 15 to 20 hours a week to put out what we put on our research list, just this part of it, let alone what we do in the fundamental research and the other parts that go with it. But the key is that you get a lot for a little, and it's time. It's you work full time, I work full time. It's like trying to learn telechart. It's what you are in every day. It's a lot easier for you to teach me, just like it's a lot easier for me to teach you some things about trading because it's things that we do every day. But it's leveraging off your time that you have that's very limited. But I like what we see relative to the markets coming alive, and that's what all of this is about. This goes out to infinity. I mean, the things that you can do with this thing that I don't have time to get into, but a really simple example is that when you see an acceleration in a sector, example is energy started to accelerate a couple months ago, and what we were able to do was go back to XLE, IYZ, which is the oil services, XOP, which is oil and exploration ETF, and there's about 30 or 40 ETFs within the oil energy space. Filter through those, find the ones we like, and then build a scatter graph of the 10 ETFs that we wanted to look at relative to oil.
Right.
Just the crude. XOIL, which I discovered in here, which is the crude price. And I can scatter graph off of that and say, is there a correlation between oil prices and what's going on with these ETFs? If there is, if the correlation is great, then I'd rather own crude oil. If the correlation is scattered and they're outperforming oil, then I want to own the stocks.
Right.
But it gives you a way to quickly scan, find, and develop ways to trade the market. And that my hat's off to Telechart for creating a tool that allows people to simply do things. Nothing that we're doing here is complex. There's no programming involved. It's all been done for you.
Especially with your workspace. I mean, you've already created these lists and these scatter graphs, as you call them, for each one of these parts of the market, and it gives people a really good starting point.
All right, so I'm going to end it here just because we could probably go on ad nauseum about this, but I think one of the key things is for us to, why don't you tell people if they want to try Telechart how they can do that?
Yeah, if they're not current subscribers, they just go to TC2000.com. That will bring up this page, which is a sign-in page. They can create an account, and from this page, they don't even have to put in a credit card. They get 14 days to try it. If they're active Telechart users, even on a free trial, and they pay you the $40 for your workspace, they can use that workspace during that 14 days. It'll work for them, and they can see and test out all of this. But that's the easiest way for them to go. They just sign in. It'll pop up once in a while and ask if you want to set up an account. You just tell it not yet, and keep using it for the 14 days. And it's a full access to the gold version of TC2000, and they can try out all these tools. It's a fully functioning version.
I mean, we highly recommend it. I mean, we've used it for 12, 13 years, and I still think it's one of the easier software packages to use if you don't try to outdo yourself, which some of us have a tendency to do.
I think that's the key. It's as easy or as hard as you want it to be. If you're a more complex person, you've got lots of ideas, you can do it on TC2000. If you want something very, very simple, you can do it. If they just want to use your workspace and that's it, they can do that too.
And that's really the cool part of all of it, and is that you can do all of those things. You know, as a subscriber, you have full access to this, and I keep hammering on this for our subscribers, is don't forget about the research page. Everything that's on the research page is not necessarily on the models. The research page is built so that you can see all of the research that we do. We publish it on the major update. Revision to it is every Saturday, and then we update the revisions. Everything's updated throughout the week. It takes the 7 major asset classes, just like we just talked about, takes the ideas that are on the horizon, takes what we're watching now, looks at all the breakout components. It gives you entry, exit, and target on every position. So if we talk about it, we tell you how to trade it. And then if you just want the simple version, you just go to any one of the models and you can trade off of the models. But I think that is really about as simple as it can get. And then the last thing, if you are not a member of our club, you can join our club. And just to show you what's inside of it, is that we build watch lists, we build charts, we build a lot of things, but you also, once you become a user of the desktop, you can always go in and use this desktop out of the club as long as you're a user of Telechart 2000. Right. If you unsubscribe to Telechart, you won't be able to use it, but but it is a great tool for everybody to use. So make sure that you use that as much as possible. Michael, I want to thank you for taking time out of your busy schedule. I know that you're pulling your hair out, obviously.
Obviously.
But with that, thanks for joining us, and I hope that you'll join us each time we bring you new video updates.